I don't know. I don't know if you guys didn't hear me at that point. I'm assuming you didn't. I'm assuming you did not because I was asking a question, and I was like, "Gosh, dang! So many people are so quiet, man." Well, that explains it. Um, so what I was saying was, please make sure to be on time. I usually say that we set a standard, right, of having being 5 minutes, 5 minutes earlier than the lecture or live starts. That means that you're on time, right? So that's important when it comes to this stuff. All right. Uh, not pointing any fingers, but just letting you know it's some good standards set. Um, let me do this as well. Mm, all right. How was your homework, guys? That was my question from before. How was the homework for you new guys? Have you learned something out of it? Started to see it more? What's up? Tell me something. Something has got to have happened while you've done your homework, right? So it can be good, it can be bad, it can get worse, it can get better, it can be all kinds of directions, right? Um, I actually enjoy the homeworks to be honest. I believe I see it more overall. That's good. Uh, Sequences from different time frames messing my mind. Yep, makes sense, and we're gonna jump into that today. More multi-time frame sequences. Start seeing breathing rooms better. Yeah, that's good. Oh, hey, Killer B, did you send in your homework by the way? I see a lot of twos, less 1 to 4 5. Not yet. That should be sent in 5 minutes before the lecture starts, right? So make sure to send that in by the end of this lecture. I want you focused here right now, all right? Just letting you know. I'm actually looking who's sending in the homework, right? I actually do that. Believe it or not, I really do. I look at the homework. That's my job, right? I see a lot of twos, less 1 to 4 5s that I thought at least for 1 minute. Yeah, yeah, that makes sense. Also notice something. When I see an F2, the one seems to come right after, almost like immediately. A lot of times CBC, but also the 1 to 2 sequence seems to come right after. Almost like a lot of time the CBC, but also the 1 minute. Yeah, yeah, yeah. You're gonna realize that pretty quick, Smear, that a lot of people that have learned the sequence tend to, in the beginning, love watching the F2 into a sequence because you get more confirmation that we're actually turning around and then utilizing that F2 as a guidance for where we're going. So F2 into A2, right? So when they're switching places, right? The high probability area to go up, the very first point where we're gonna shoot up from. Yeah, there's a lot of people. A lot of people tend to see that over time, and that's usually that's usually the case for the majority of us, right? Um, so it tends to it has happened to a big majority of the people that have been going through the information. So that is inevitable, I would say. That happens, right? really good. I started seeing way more sequences, but also seeing heaps of F2s. So trying to figure out which ones to trust. Yep, yep. For you, Bryce, it's understanding which one to trust and which not is the story essentially. And we're gonna run into that in the future as well over the course of the learning, right? Basically getting the direction idea of how price is moving, right? Um, all right, good stuff. Hitting some balls while learning. Hey, that's believe it or not, but even though you hit 30 hours a week, Elvis, you still look to learn, right? You still look to develop as a better trader, right? Isn't that crazy? Even though we're pulling 30 hours a week here and there, back to back, back and forth, we're still saying, I'm getting stuck at this one, I'm getting stuck at this one, even though you're pulling in heaps of hours, right? So it's pretty fascinating, isn't it? It's really cool. You start to get addicted to becoming a better person, a better trader, better shit show trader, how you view price more efficiently. All of these things you tend to look into, right? So that's pretty cool. And I enjoy it. I really do. Um, this week is not so good, but I do complain as I'm only training a little bit fewer mornings or evenings. Yeah. Um, Same for me. It's definitely not been my best week, right? But that sets us up for the upcoming week, right? It's gonna be hard to beat those 400 Rs. I'm pretty sure not gonna happen until some time goes on. Hey, let's dig into today's session. We're gonna look into advanced sequence. I really want everybody to be dialed in, focused, right? I want you to focus. I want you to have pen and paper. If you're at work, you need to listen in, even though you're working, right? It's very important. This is the stuff that a lot of people tend to get stuck on as well. I'm not gonna point out anybody, uh, but we're gonna run over somewhat tap into multi-time frame sequences and then have a whole separate section about multi-time frame sequences in the future as well. So we're gonna tap into more the understanding behind why things are happening the way they are happening. All right. Um, so what you should have gotten so far is understanding how the sequence is efficiently moving and less efficient moving, right? So you should understand that if price looks like this, it's an efficient sequence, right? That turns bearish right here. We should understand that to this point. Um, when we're watching price in this manner, it's very, very important that we absolutely have the big understanding of price. Now, what I've seen over the time and over the weeks and over the months that I've been teaching this to other people um, is that people kind of get stuck in this one idea of this needs to happen in order for us to play the game, right? This needs to happen. Keyword here is need, which is completely incorrect. It definitely does not need to happen. And you don't have to be right to make money. And you've heard other people say that before, but this time you will start to actually understand it and implement it in your trading. It's going to be a whole different idea behind why you don't have to be correct. All right. Um, Behind the sequence, let's do a bearish one. Um, the reason why it was created was that I didn't understand structure in a good way. Because every time I saw that being a short, I got stopped out. Price ran up here and then started heading back down. While we were heading back down, I thought we had switched to go up. But price did that and then did that. And then price shot right back up. And then I was confused if this is the area price is gonna react from, or if it's this area to be bearish again. But price just went higher. But we need to understand in this instance is that we are utilizing where everybody's getting stopped out. That's the first and foremost thing. Uh, Trading at the end of the day is a psychology game. You're playing with other people's emotions. When somebody is losing, you know that there's a high likelihood or a better price to get in at. When you know where people are sitting at taking their stop losses, you will know where you are likely to get in. You can play the other hand. You can play the winning hand. When people are losing, you might be winning, right? That's the beauty of it. That's why trading works, because there's people driving the market. There's big constitutions driving the market. There's big events driving the markets, right? So people are trying to get ahead and understand where they're supposed to get in, where to put your stop loss at, and if the majority does it, what I tend to see is price likely sweeping that area. I'm not talking about some algo. I'm just talking about efficient price action. The higher up we go, in this case, the more likely we are to shoot down. The lower down we go, the more likely we are to shoot back up, because people will think it's what? Well, it's basically a situation where you're getting more bang for your buck, right? If I can buy more sneakers up here for the amount of $200, or I can buy the same sneaker down here for $100, which one would you choose? Well, of course, the 100. You'd be stupid if you buy the 200. But that's what people do. At the end of the day, the market is only, and I'm serious about this, it's only buying low and selling high. Selling high and buying low. That's what the market is about. And we need to get that straight. That's why I also say everything works, but our minds doesn't. And then we're looking to add the stuff to how we utilize where people are being wrong, right? Where people tend to be wrong. That's where we're getting in, because what you're seeing here, where I used to take a stop loss right here, that's just a 2, which means that would be the potential 1. Price runs lower, I would take a stop here, and that turns into a 3. Price runs higher up here, that's a 4 or 5. And now people are too afraid because they got cooked, they got cooked, they got cooked again, and this time it works, right? That's the sequence. The sequence is utilizing where you used to be stopped out on. Where you once used to be stopped out, and I can promise you, if you go back to watch your previous journal trades that you might have taken, what you're going to see and what you're going to end up noticing is that this is exactly what is happening. You just didn't see it. When it comes to understanding the sequence itself, we understand the breathing rooms. We understand that this is a P2, potential 2, which means this is a P1. What is happening in here is that this is one time frame. Let's call this the 15-second chart. Multiple candles, right? What we're having here is potentially 10 candles from this high to that low. If there's 10 candles in here, that's most likely a 15-second chart shit show. And note this down. 15-second chart is the shit show level. That usually represent 10 candles, usually around as a guideline. 10 candles in the 1 minute chart, which means about 40 candles in the 15-second chart. From this high to when we sweep it to the lowest point here where the P2 is. That's most likely a shit show level. Now, if we have the same scenario, and now we have about 8 candles, 7 candles even. As a matter of fact, 4 to about 7 or 8 candles ish. That tends to be what is so called the ISS level. Why do we call it the ISS? It's called inside shit show level. Inside shit show levels are not to be treated in the same manner of PYs as the 15-second chart shit show levels. And then we have everybody with me, by the way. I just want to make sure that everybody gets the right notations down. All right, cool. Then we have the 3 candle setup, which is called the CBC. Now there needs to be specifically 3 candles. It cannot be 4 candles. It cannot be 2 candles. It needs to be 3 candles specifically. And I'll get into that later. What you have right here is essentially how I'm utilizing the multi-time frame sequence playing out. You have different time frames. This is 10 candles plus on the 1 minute chart. This is 4 to 7 or 8 candles, which is on the 1 minute chart. Everything relies on the 1 minute chart here. This is 3 candles on the 1 minute chart. So what you have here is the SS level, you have the ISS level, and you have the CBC. What differentiates these levels with one another is understanding that these can all be tapped into this one. What do I mean? Well, the ISS can be inside the shit show level. The CBC can be inside the ISS level. And then you have something more advanced, which is simply the tick chart level, which is on a very advanced material, but that's when you're reading the ticks inside each and every single 1 minute candle. And that's how I can have very, very, very tight stop losses. So this is what we got working with. And this, by the way, I can actually just do this, and you're essentially going to see this. Um, all of this stuff is multi-time frame sequences. You are utilizing all of this in here when you want to take a trade. This stuff is extremely, extremely powerful because you will be able to get into a trade right here with a 1 point stop and target the 20 points. You are, for example, seeing, you've seen Huckle trade as well. I'm just bringing him up as he is having some sort of breakthrough through the tick charts recently. He's utilizing this, and he might look into something like that. So he's getting a very, very tight entry and taking its profits before he's being correct. Right? So you can utilize the tick chart within the CBC, within the ISS, within into the shit show level. And the crazy part about this is that you also have this. What you have right here is the shit show level going back into the ISS, into the CBC, into the tick chart for it to explode. But you can utilize it backwards as well. Take chart into CBC, into ISS, into shit show level. So you can utilize this as some sort of ecosystem that just goes around and around. What you have right here is the greatest drawing of all time. CBC, ISS, SS. Or SS, ISS, CBC, and maybe even tick chart. And then price will explode from here. So you can narrow down price into the very, very last point where it has to give a huge explosion away from it. Or you can see it expanding and expanding and expanding. You will see that everywhere in the chart in the future. And a matter of fact, this doesn't stop here because price never ends to create bigger and bigger and bigger. And hence, this is the reason why why people say the market over time will only go up. Because it has begun, but it just has never stopped. And once price did this, and now it's going to expand, expand, expand. That's why you're also seeing why price is ever expanding. That's why we're sitting at 25,000 as we speak, right? That's why we're sitting at these type of levels because at the end of the day, price is just ever expanding in the form of price. It will only tend to expand. In the beginning, when the market opened, you had a daily range of 10 points. Now we're sitting at 300, and that's normal. That's because price just expands into bigger and bigger and bigger and bigger and bigger, right? And this is the reason for it. Um, so what you have right in here is this. You have that big two, you have that two in here, and then you have a CBC2. Price moves lower, you can utilize CBC2s in here as well. It moves down into here. Price will most likely do something like that, maybe. That's maybe the ISS. And now you can utilize the tick chart on it to take along in here to go up. Matter of fact, see this? I would say this is an ISS. It most likely looks like an ISS. And what I did in here, I utilized the tick chart inside the ISS to move lower, multi-time frame sequence. So what you are essentially watching and utilizing in here is essentially something that is very, very powerful. It's multi-time frame that is ever flowing, ever ongoing, right? So I'll dig down into what a CBC is in just a sec because that's something we need to run over. Um, but what you have in here is that you need to understand that the more things we on go, the more things that it pushes towards these levels. If you're seeing this P2 right here, you can take a huge entry, right? Just like this. Take that entry, and it's going to look like this. Sure, 1.6 is, I guess, okay. But on the side of here, you will have this happening. Up, down, up, right? So now your stop goes to here, maybe. And then inside of this one, you might be utilizing this. So now your stop goes up. And then you inside of this, you might be utilizing the tick charts, which means your stop goes even further up. And now from a 1.6R, you all the way went back up into a 20R by utilizing the multi-time frame sequences that are playing out in front of you. And it's going to happen in the same manner that you're utilizing the basic sequence foundation that you have just sent in your homework for. That's what you're seeing right here. So the CBCs are something that I tend to use a whole lot in my trading. Some people do as well. I love to use the tick chart and CBCs as just my last point in which price can go down. Why do I do that? Well, if that CBC does not work, it means that my entirety idea of that trade is most likely going to fail. The reason why I'm getting in with such a tight stop loss right there is just because if that happens, if I tend to be stopped out, I know that this is the point in which a whole new set of sequences are going to start off with us going to the upside. Because at some point it has to change. Watch it. What just happened? Look at this. Yoink. See that? Fascinating, huh? Because what happens is if I get in here and if that gets ran, a whole new sequence will set off. And I don't know which way it's going at that point. I just know that if price wants to go higher from here, it's going to shoot back up because price can do this very thing right here. But if it doesn't, it will stop me out. And that means I'm wrong with my idea on the big perspective, but utilizing the smaller time frame. And that's the power of pulling in your stop loss into a very tight one instead of having a huge stop loss. And you know that you're already being wrong over here. But there's so many people living in denial of being wrong so that they tend to hold on for their trade for eternity because they say, let me just set and forget. Well, there's a reason you got in. If you got stopped out, that means you've done something wrong. You've misinterpreted the market. You have a misunderstanding of what's going to happen. And you can realize that way beforehand. Way before, right? So that's definitely something that you can utilize and follow along with, right? Um, so this is in essence the basic foundation of multi-timeframe sequences. This is the so-called advanced sequence. All right. So you're gonna follow along with how price is tapping into this, moving into here. All right. Now we have tapped into that too. That does not mean that this too is going to succeed because price can do this. Oh, there you go. It failed. Well, or it didn't. Because if price does that, price might do that. How do you explain it? Well, if there's a 2 up top here, it could definitely just be that that's a 2 into a 3, and now you have a 3 inside the big 2. That's numbers characteristics, which we're going to dive into in the future as well. So this very stuff right here is extremely powerful when it comes to understanding direction of the market as well. Multi-time frame sequence is key. Everybody that are making big type of R's today, everybody in this group that are pulling in heaps and heaps of it, they're utilizing the multi-time frame sequence. I have yet to see one single person that don't use multi-timeframe sequence put in a lot of R's. I've yet to see it. Everybody is utilizing multi-timeframe sequences. Everybody is seeing this stuff. And you are getting there. And this is how you explain it, right? The reason why a 3 can be at the 2 is because on a different time frame, there might be a 2 on the downside. This might be the ISS 2. Because if price as with this 2 runs up higher into this big 2, now we have that 3 that wants to go lower to sweep that low. And we have this big 2 that wants to go down here to sweep that 1. So now we have a reason to run lower. All right, so what does this tell you? Well, what it tells you is that every single turning point, every turning point has a sequence that tells you when it's going to turn around. I'm talking 100% of every turning point in the market will be explained through the numbers. And guess what, my guys? You will know when price is going to turn around and read it like a book. That's what's happening. Are you guys following along? Because if there's something I want you guys to bring with you after today's lecture, it's going to be the very sentence every turning point is a sequence. And I can't stress that enough. And I don't only want you to understand it, I want you to believe it. And if you don't, I'll make sure you will believe it after this lecture. Don't you worry about it. The CBCs work in this manner. Couple of rules to it. It feels like I'm getting more and more efficient with drawing these out because I've done it before, right? We have three scenarios of how a sequence inside the CBC can look like. I even forgot to put this on. So this CBC right in here is utilizing the entirety of how price might turn around in the market. One rule behind CBC, well, we're actually gonna run into a separate lecture because this is taking you to some advanced shit. So I'll simply explain this. You don't need to understand why hit this and that, and because we're gonna run into that as well. But these are the rules behind it. This one is failed. This one is failed. This one is successful. Now, as you can see, there is more ways for the CBC to fail rather than the CBC to succeed. Isn't that fascinating? What that should tell you is number one, the CBCs tend to fail more times than the successful ones. But when you add up the successful ones with a higher time frame, as we know, this is a lower time frame one, right? CBCs, right? We can run back into this stuff down here again. CBC, ISS, SS, right? But if you combine the successful one with a high time frame procedure and understanding of the market, guess what? That is going to be a very high likely setup. What you're going to realize just now is that all of you that have done the homework, all of you see that you've already done this without you even understanding it. Because take a guess. Up, down, up, sweep it, failed to. Up, down, up, run two lows, failed to. Up, down, up, sweep it, successful too. Do you guys see it? This is what you've been doing. This is what you've been practicing through your own sequence when you've done the homework. And what I'm saying here, and what should blow your mind, is that every single candle, let me say that again, every single candle in the market is at the end of the day a breathing room. If there's two candles next to one another, there's a breathing room. But just on a different time frame that you're not used to seeing. And holy smokes, but this is going to blow your mind when you start to read it like this after today's lecture. You think breathing rooms change your mind? God dang. Are you guys ready for this? You guys ready? This is a random point in price. I can pick wherever you want to. But this right here is a random point in price. Look at this, for example. Up, down, up, runs two lows, failed two. Up, down, up, run two highs, failed two. Run one low, failed two, into two. This is your long. Go up. High, right? Look at this. Next couple candles. Run that low, long. Low, low, run both of them, failed two, right? Run one high, run itself, go up, right? Go down, up, failed two. That also turned into a breathing room. Price can do that. Every turning point in the market that you see is a failed two or a successful two. Every turning point. This is some more. Sweep one low, that's a 2, into a 3, runs that low, 4 and 5, goes down, goes up, fail 2, goes up again, right? Goes up in here, sweeps that low, going higher. 2. Question: if you only count 3 candles in CBC, doesn't that mean that we never count the 4 and 5 on CBC? Uh, I never tend to do that because here's a rule to it, and that was what I didn't want to get into, but I'm gonna get into that now anyways. CBCs, in essence, should not be viewed as a separate sequence. It's too low of a time frame. Trading the CBCs by itself will get you stopped out more times than you succeed, unless you pair it together with a high time frame perspective, sweeping a breathing room, then tapping into a CBC, and then utilizing it. If you're only going to trade the CBCs, you will be stopped out more times than not. Why? This is the reason. What will you have at the end of the day? 33% win rate or something? Why? Because this is 33% and this is 33%, for example. I don't have the specific statistics of how many times it fails. But if you add this to higher time frame, this is going to turn into a huge amount of win rate. So trading CBCs by itself is dumb. Understanding how price is shifting is good. So this should be viewed as your entry point and how price is shifting inside something bigger, inside your story, inside the bigger technical, right? So now you know that every turning point in the market is a sequence because CBCs are, in essence, a smaller time frame sequence, but shouldn't be viewed as one. Because the lower time frame we go in price, it's more likely stopping you out. If you go down to the take chart, it's more likely to stop you out if you trade it by itself. But if you add the bigger context of it, then you have a better win rate. So the 4 and 5, many times, I don't tend to view it as that. Many times, if we reach the 4 and 5, smear, watch this. You're about to be mind blown. All right. Imagine this being a CBC, right? Imagine this being a CBC2 sweeping one candle's high here, and this is the other candle's high up top. Price runs lower, and then we run to sweep that CBC as the 4 and 5. Many times, what this is, because we know that every 4 and 5 is essentially the 2, right? So what just happened in here is that the CBC turned into what I mentioned in the beginning. The CBC just turned into the ISS chart, the ISS2 from the CBC 4 and 5. And the ISS2 was swept. So that's a 4 and 5, right? That's just a 2 on SS, on the SS level. And that should be like, holy smokes. That makes so much sense. Yeah, that's right. And that right there is in essence the multi-time frame sequence playing over and over and over and over. And you know what? What is crazy about this is is that it's just my favorite chart when you view it from that point. If that's the two, that means this is the 405, which means it's the two on the higher time frame, which means it's the 405 on the higher time frame, which means it's the two. So at the end of the day, now you're seeing, oh wait, everything starts to fit together. He's speaking about it. I'm not seeing it, but now he's showing it, and now it makes sense to why that's the best drawing of all time. This right here, people, is the multi-timeframe sequence. Yeah, I love it, man. I love it. I love that you're enjoying it, man. And this very thing is what I mean. This is what you will be utilizing when you're trading the markets. You are going to be watching every single time frame from one. And it's not hard. Why? Because you understand the numbers characteristics behind the number. You understand how it's fitted together with what? Numbers. And guess what comes first? Numbers. And then the market prints. It shows patterns based on numbers. Numbers comes first. That's why you're going to be ahead of market structure. Because if you know that that's a 2, this is most likely going to be a 4 or 5, even though we're sitting over here. You can utilize the smaller time frames in here to predict the future easily. Easily. And this right here is the multi-time frame sequence. Honestly, I don't think this confuses me. It more makes more sense what is way to comprehend. Yeah, that's right. It just makes sense. You can just be like, all right, well, I see it. And you will be starting to read price through numbers and understand the story behind the numbers on how they're playing out based on just how they act up. And the market is, guess what, my people? Is going to be easy. Because didn't I just mention that this is what's going to happen in here? Look at. Didn't I just mention that this was about to to happen? As I'm teaching, a random point in price, random time, where I said, now price can go from this point because this is what? CBC2. Turn into an ISS2. And what you're starting to see here is just a it's just my favorite chart pattern of all time. This is just what we do. Is there a visual CBC in the low turning point on the chart? Um, on this one, for example, I misdrew this actually because what you actually have in here is this. Look at high, and this is also a high because that's a low. So we have two highs being swept. As soon as we make an equal low with that, you have a 2 right here. Oh no, lower. And this one, oh, low of the day. Well, you can definitely catch this. That's one high. That's the second high. High, low, low. You can even do this. And it usually goes back to you where you have your entry. That usually tends to happen. And I'm pretty sure this just went right to it. If you're doing something right in the market, it's gonna go back up to your entries. So that's a 20R right in here. And that's based on what? How did the market turn around? Candle, candle. Sweeping two highs means that's a fail too. It already actually failed here. You just look for CBC long. Sweep that. This is the 2 on CBC. And inside of this too, I promise you, you're going to find in here a tick chart 2 or a failed 2 in here. So your trade can even be this. This can be your trade. And you're like, well, I'm pretty unsure about that trade. Now what? Still unsure about that trade? And then taking the tick chart 2 in here, or the CBC 2, or even this CBC 2. This right here is the story of how price is playing out. And I'm telling you again, this stuff is just the beginning. This stuff is just the beginning of what's coming, man. This is just the advanced sequence. This is old news to a lot of guys in here. But they are utilizing it every single day. They're reading it every single day. Any other questions? This should mind blow a lot of people. This is probably the first class that uh, the first set of people, right, that is not being completely mind blown, or they're at least not showing it. There's, I don't know if you guys seem to be more autistic or have gone over more information or something. Uh, but I'm pretty sure this should blow your mind because you will be able to see every turning point in the market. And guess what? While we're speaking about this, that's the ISS2, right? CBC2, that's a short. ISS2, that's a short. That's the 3. Inside that 3, you have a CBC2. You can take a long in here to target that high. You understand that that 3 is want to go up in here. You can utilize that too to go up in here. And this right here is the story of price. And it gets to the point where you will predict the market. And I'm not afraid to say it. There's so many people saying it's impossible. You can't predict this and that. You can't predict the market. It's impossible. Whatever, whatever. Joke's on you. You can actually do it. Just that people have not been able to view something more powerful than market structure itself. You are predicting market structure. You are ahead of the market. Why? Because of numbers. It tells you. Now go to the high of the day. Either this high or in here. Which one do you want? It's going to happen. Your choice. This is not a CBC, but this is a sequence in here. Sweep that low over here. What do you have in here? That's a CBC2 into a CBC3. Price runs that high. What do we have? ISS 2, which is the CBC 4 and 5. Sweep that. That's the 2. Go down. And you can do this as well if you're unsure about that move. That's the top of the 50. When you're utilizing the ISS, you can use the tick charts within. So your entry would probably be somewhere around here to target that low. Because here it's telling you that we're going to go down from this point. You can be short in here. Or in this case, on the tick chart, you will be short in here somewhere. In this case, I mentioned that before. If you're utilizing the ISS, you will be trading through the tick chart because the ISS usually don't provide you with a CBC. The ISS provides you with a tick chart too, or fail to. So when you're utilizing taking entry through ISS, you will be utilizing the tick chart too. If you are utilizing the shit show level, it's coming from the 50-second chart, that's when you'll be utilizing the CBC because it's just bigger. So this is how it's formed. CBC is your entry on the SS. The tick chart is your entry on the ISS. So that this is usually how it goes. Now you can sometimes get the CBC on ISS, which is definitely possible, but it's gonna happen less amount of times. But that's I don't want to dig into that too much right now because it will just confuse you for now. But I'm telling you, every single point in here, it's crazy. Um, I had this discussion with Renup, and I believe it was always that explained how the tick chart different compared to the second charts. But since I don't have the tick chart, is there anything that could be utilized somewhat the same way? I've tried the 5 second, 1 second a lot, but I know it's not the same. What are your thoughts, Jay? My my viewpoint will always stand on this. I read the 1 minute chart as the tick chart. So what I mean by that is I print a sequence inside my mind as price is playing out inside of these candles. So now it's going up a bit. And so if we move down here, that might be a 2 to run higher. So now that might be a 2 to run higher. And if price runs itself, then we might have a failed 2 on the tick chart to go lower. So this is what I'm utilizing. So that might be a failed 2 right in here. So now it might mean that we are going lower. And that's why we're going lower, right? Um, and as you can see now, it ran itself, failed to go lower. See what I mean? Now price might return back up like it just did, and then run lower one more time, because that's when we have the potential to run lower now. So fail to into a 2 to then take it off to the downside. Yeah, exactly. You can utilize the tick chart on that ninja chart as well. That's the 2 that succeeded to run lower. I mentioned if we run that low, failed 2 into 2 to go lower. Now it just did. And now you see how I read price on every single candle with the expectation of something. So now we're sitting at a 2 over here. So now price might run back up, sweep that one more time. That's going to turn into a CBC. See that? See that wick above there? That's a 2. We just swept that 2. So that's a 4 or 5 on the tick chart. Right? and now we're in that 4 and 5. And this is what happens when you start view it. All right, so it's always bullish. See what I mean? And this is what we can do. We can read through it on every single candle. Every single candle is readable. It's easy, right? And what just happened in here, if you don't notice it, this right here is just what? The CBC2. Because we swept that 2, created a bigger 2 to go lower. So that's, see that? Down, up, down, CBC2, go lower. I was just to stick to CBC entries until it sticks hard in your mind. There's not always an entry on CBC, but it's okay. You definitely have loads of opportunities on the 1 minute chart entries, and it's better at first to learn catch trades on 1 minute. Definitely, yeah. Yeah, I would say stick to that as well, since that's something that's gonna help you out in the beginning, and then when you've gotten the idea of CBC, you almost sort of instinctively, instinctively, instinctive, you move into the tick charts. The tick charts happen almost automatically after you've understood the CBC. You will automatically, your brain will be forced into seeing those things, right? I would say we're essentially already watching live price in here, so we might as well just keep on going with live price, right? And this is the power of it, right? This is the power of it.